All right, ladies and gentlemen, hello. My name is Darius Anucauskas, and I'm the Chief Market Analyst here at Markets.com. And today is Wednesday, ladies and gentlemen, the 29th of October, 2025. Look, it's a big day. We have a Federal Reserve interest rate decision, quite important, a long-awaited one. In addition to that, we also have the Bank of Canada interest rate decision coming out before the Fed. And of course, we have the US president running around Asia making deals. Now, everything is affecting the market, of course, but we'll look into all different instruments and how they're performing right now in a bit. First, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. So yes, it's a busy day. Markets are moving. Futures, cash, everything is moving right now. Look, what I can say. Oh, by the way, what I can say. I can mention actually our Markets.com website, which you can always check out for more information about us. Also, do not forget to join and register for my webinar tomorrow. It's the basically I'm going to be looking at the Bollinger Bands. It's the third episode in the series where I look at the different top different indicators for traders. And basically, we try to just base our trading decisions on the indicators. We're actually entering trades. They're live on a demo account. So, yeah, we want to see if they're worth looking at. So, tune in. You can find the link in the description below. Hopefully you'll enjoy the session. Ladies and gentlemen, let's have a look at the economic calendar. So this morning we got the inflation numbers from Australia. Look, the monthly CPI indicator came out at 3.5 against the previous 3%. That's a bit of a bummer, I would say. I mean, and also inflation year on year here at 3.2 against the previous 2.1. I mean, look, that's a significant rise, and given that we have RBA in the beginning of November coming out with with a rate decision, I think that of course they're not going to do anything because again, inflation has picked up quite significantly. It jumped above the range, the target range, which is between 2 and 3%. So it's kind of it's a difficult one for Australia. Anyway, but of course, like I said, the main thing here is this right here, which is coming out in less than an hour. The interest rate decision from the BOC. Now, look, we do understand that they want to do a cut of 25 basis points, and to be honest, we understand, why, because they continue to boost. They try to boost their economy. Inflation numbers, Canadian inflation numbers are still okay. They can afford. They can afford to go for a cut despite the recent sharp uprise from 1.9 to 2.4, and still, I mean, look, it's just a little bit above the inflation target of 2%. So. But the thing is that given the circumstances right now, and we know that the White House leader decided not to have any trade talks right now with Canada, so that kind of puts Canada in a little bit of a difficult situation. However, we can understand that it wasn't Canada who initiated that, so it's a little bit of a unfair game, I would say. But anyway, let's see what's going to happen here. I think that yes, of course, they're going to go for that 25 basis point. But now something kind of goes into my head right now and thinking, hey, given these circumstances, could they do actually a 50 basis point cut just because they need to boost the economy? And it's unclear when they will have these negotiations with the U.S. So maybe again, like I said, to go for a 50 could be an option. However, on the other hand, you might actually spook the market this way, thinking that, oh wait, is everything that bad that you were planning to go for a 25 basis point, but now you're going for a 50. So that's why there's, like I said, I'm still leaning towards that 25 basis point cut. Am I excluding the 50? No, of course not. Anything is possible, and but again, to drop it to 2%, maybe that's already too much, and given the fact that inflation, like I said, ticked up, so maybe the market might not understand that, like I said, and that's why they might think that it's actually a bad thing. Yes, it could be a momentum shot for a good positive momentum shot to the upside for the Canadian stock market. However, I think it could be just a momentum gain. Anyway, so we'll keep an eye on that one. Of course, we'll keep an eye on the press conference. But the main press conference that we'll be watching will be the Fed, Jerome Powell's press conference. Yes, the interest rate decision there. They're also expected to cut the rate by 25 basis points, bringing the range towards between the 3.75 and 4. But the big question for me actually is that yes, we know that they're going to do another cut in December, but are they actually going to somehow signal that, hey, you know what, we're looking in doing more cuts in the beginning of next year? Um, Look, I'm not already talking about this year. If they decide to suddenly, hey, we're actually not excluding two cuts in December, I mean, that would really, really push the stock market higher. Honestly, like the stock market is already way too elevated. But hey, it seems like right now the Fed is more focused on pleasing the White House. Maybe it's because the Fed chair is kind of leaving next year, so maybe just to leave on on good terms. That's where the idea is. But again, this is just me speculating, of course. But certainly, the big question, like I said, is are they going to do more cuts in going into January, or are they going to take a wait and see approach? Now, if I look at the charts very quickly, if I look at gold here, look, if we're gonna see them saying that, or we're gonna hear them saying that they're gonna do more cuts going into January, there's a strong possibility that they're gonna do some more cuts going into next year. We could see gold actually rallying again, pushing higher, maybe even surpassing the 4,075 territory, because this is what I'm watching here today. I want to see if we can shoot back up here towards this 200-day EMA here. Sorry, 220-day SMA here on the inside the Bollinger Band, which is around the 4,075 territory. If we do clear that area, I will consider a move to the upside. However, if we do hold below this hurdle, there is a chance of a push back down. Now, look, I've drawn this Fibonacci retracement from the current all-time high to the current lowest point. Let me just double check if this is the current lowest point of this month. No, that's not it. So the low of the low for now of Tuesday, yesterday's Tuesday. So this decline, after this decline before seeing this reversal to the upside. So there we go. We're seeing a nice retracement. Where, like I said, this 38.2 aligns perfectly with my target, this 4,075 zone, 476-ish again. It's a good area of resistance, but if it holds, we could see another correction back down. Look, my situation right now, difficult situation, is with the US dollar, DXY dollar index. Look, beautiful rebound right now we're seeing. That's all great. It seems like, why are we seeing this rebound when the central bank is expected to go for a cut? Should be the opposite, should be a negative option here. But I think that I said it before and I'll say it again in one of my videos here, top news videos, which I picked up, which I did 2 weeks ago on DXY. I said that if can DXY steal the thunder from gold, because look, we're going into the holiday season, right? I mean, everything is getting more expensive. We don't know what's happening with the real economy in terms of like labor, because we, of course, we can have feelings in terms of, we feel that everything is not very good, There's not much job creation. Yes, maybe not a lot of firings, but not a lot of job creation as well. So in a way, this creates this bad feeling, and certainly everybody's afraid of AI and what's going to happen. Which jobs are going to be taken away. We can speculate on that, of course, and of course there are two sides of it. Some are afraid, saying that the jobs are going to get taken away and blah blah blah. The others are saying, oh, but you can then retrain for this new job. So you're in both scenarios. We're actually confirming one thing, that jobs will be lost. So this is what people understand. People are getting to know AI even more, and actually, it's a little bit of a scary thing for corporations. Fantastic. You're cutting jobs. You have a reason now to say that, oh, I'm going to I'm going to implement AI in order to save some money, right? But the biggest saving, of course, will come from slashing jobs, because again, those are the biggest that's the biggest resource. That's where the money goes in. So in a way, all these little small jobs can be done by AI. Now, anyway, of course, like I said, it's a debatable thing, but as always, nobody looks into the kind of the process, the transition period. Everybody's more focused on their final result, but again, it's a little bit difficult to understand if the final result will be something that is actually was actually worth all the investments that they're doing right now. Anyway, this is the point where I was kind of wanted to say that we still are lacking job numbers, because of in job numbers and general other numbers, because the U.S. government isn't shut down. So it's making the Fed's job a little bit more difficult, and maybe that's why the Fed will say, you know what, let's stick to the current plan. Two more cuts by the end of this year. So one today and one in December, and then we'll see. So again, that's my view, because this U.S. government shutdown is not really helping. And another thing is that when all comes back, when we start getting all these job numbers, initial and continuous jobless claims, honestly, those are really piling up. Look at this is for this Thursday. We have one, two, three, four, five numbers we're missing, continuous jobless claims. So in my opinion, the numbers probably were not the best, and the government conveniently went into a government shutdown, basically in order not to deliver those, because, well, it could actually damage the image, or not, or damage the whole positive atmosphere that we were getting throughout October, where big corporations were making deals. AI, your AI, your Oracle, your Nvidia, your Microsoft, your Googles, and all Metas and everything, and all revolves around AI, and and chips, and how they want to throw out more money into all this. So that was the only driving force behind these indices rallying like crazy. And I mean, come on, this is going to be, like I said, this is the to me, this is a worrying sign. Call me a party pooper, of course, but honestly, this is a little bit of a red flag, to be honest. So when everything gets inflated like that, it's too much. And another thing is that when you're trying to find all these funds to fund your AI goals, and now you understand that not every big financial institution wants to fund these projects, these AI projects, because okay, they already poured money into it. So now let's see what's going to happen, right? And now and your corporate bonds are not even like enough to fund all this whole madness. So you're going into private. So basically, we're spreading the roots into the whole financial system, and it seems like we're ready to collapse or something, whatever. But again, probably critics will call me a pessimist, and but we've been there, we've done that. Honestly, it's like a repetition of certain scenarios in the past. Maybe a little bit different, and this is what probably will people say, that oh no, this time it's different. And I'm not saying that AI will disappear or something like that, or it hasn't got a place to be. It will have a place to be. It is a thing. It could be useful. Could be. That's another debatable thing. But one thing for sure is that at this point, when everything gets over inflated like this, right? I mean, we had the dot-com bubble. It all collapsed eventually. Did the websites disappear? No, of course not. But certainly we all understood that these crazy valuations, like Nvidia right now is going crazy. It's just look at this. I mean, pre-market new all-time highs. It's a four. Let me just refresh this page here. It's already coming closer to 5 trillion market cap. I mean, wow. So 5 trillion market cap for Nvidia, and it keeps on growing. And honestly, well, again, these valuations, those are crazy. During the dot-com bubble, you also saw crazy valuations. But what happened at the end? We all know that. So again, once again, I have to state this. I'm not saying that I'm let's say calling out for a correction or something. Although I was saying about gold. If you watch my videos, recent videos, last week's videos, weeks before about gold, how much more it can travel. I was calling out and I said that look, I was aiming for 4,310, something like that. Okay, it overshot just by a little bit and then reversed back down. So because this is not logical when your commodities are rallying like crazy like these. Yes, there is demand, of course, understandable, but I think, like I said, whatever comes up must come down. And look at this. For silver, for example, we only this is the third time in history we're seeing such a crazy move, such a parabolic move. What happened after that? Correction lower. So I'm gonna stick to my, like I said, to my kind of vision, this view. I think that there could be a big correction back down. Maybe in November we could still see a rally here, maybe even in December. But I'm, again, like I said, I'm being a little bit more on the careful side, because if we suddenly see U.S. job numbers coming out, and they're gonna confirm that they are bad. I think that the stock market can really quickly change south, and can look at this. This is a monthly chart on Dow. This is a monthly chart in the S&P, Nasdaq. Look at Nasdaq. I mean, this is just a crazy animal which continues to rally. Right now, the cash index is at around 26,120. So we're like almost like 100 points above right now, where we closed yesterday. So another runaway gap here to the upside. Eventually these gaps get filled. That's one thing for sure. Eventually these gaps get filled, so just be careful. The only thing is that what's going to trigger that? Will it be the Fed today? Because if the Fed will say that, let's chill, let's not go for more rate cuts, because again, the economy is overheated, I wouldn't blame them for that. I wouldn't blame them, because it's yeah. And right now, of course, the whole U.S.-China thing, the trade talks and everything. Look, are they gonna reach a deal? Could be, but I'm not. If they're not gonna, let's say like this. I mean, this is a scenario that I'm giving because we have seen something like that before. They're gonna say, they're gonna meet tomorrow, Thursday, and they're gonna reach some sort of a deal, but not the full desired deal. Again, this is what happened before. Um, let's see if this is going to repeat itself again, because again, it seems like we're watching these patterns over and over and over. And hey, let's prepare ourselves for those, okay? And like I said, DXY, the dollar index, even in the environment where we're expecting more rate cuts, it depends on the wording of the Fed. Maybe the US dollar could actually rally. But again, I'm not judging here. I'm not saying, I'm not kind of trying to guess too much. But if we clear the 99.14 zone, somewhere around here, yes, I'm leaning towards higher areas. But if we clear the upside line here, we break this upside line, well, there's actually a chance of a larger correction towards the 98 zone initially, and then we'll just take it from there. Ladies and gentlemen, again, let me know if you agree or not. Let me know in the comments, because again, I said a lot, and there's a lot of maybe debatable things what I said. However, we have to talk about this, and we speak it out loud, and hopefully we can reach some sort of a consensus, or some sort of an agreement. Hopefully, they can reach an agreement tomorrow. But yes, ladies and gentlemen, thank you very much for watching and listening. I hope you found it useful. And as always, stay safe. Have your stop losses in place. Risk only what you can afford to lose. Don't overtrade, and everything will be fine. And yes, don't forget to sign up for tomorrow's webinar. I'll see you around. Bye bye.